All right. Hello, Matt. Welcome to episode 56 here, I believe, of Going Live with Good Soil. How's it going so far? To Tuesday morning, July 26th. It's a big down day so far in the morning. The day before the FOMC meeting of July. What are your thoughts about all this, Matt? What are your thoughts on the macro market and the movement of
I feel
this?
like there's so much to talk about. It's just I almost don't know what to make of the market movement because there's just a lot going on. But to me, the big one this morning that I think probably spooked markets a little bit was Walmart, who had been guiding for like a flat Q2 essentially. Now revised their guidance downward, saying they expect like an EPS drop of around 8 or 9%, while actually raising top line. Um,
Mhm.
so, I think that kind of spooked market. If you look at like what's happened at Target and some other retailers, their stocks are getting hit particularly hard today, and I think that's kind of leading the charge on this big downward day that we're seeing today. But it's kind of like right ahead of a bunch of economic indicators that you alluded to. So big week for sure. We got a lot to go on macro. We got a lot to talk on Tesla and everything else. So
Yeah.
yeah, I don't know. To me, that seems like what's going on today. But what do you what do you make of the move today?
Yeah, Walmart doing the pre-announcement of, I guess, a down, a bad, a not so rosy colored earnings for them, and it's just negative news. Like sort of when I think didn't they do this last quarter, Target and Walmart or something similar? I feel like, and um, the market kind of crashed a little bit the next day or two. So I think a lot of it is also just a sort of a vacuum the day before the FOMC meeting announcement and the GDP print as well. So sort
Yeah,
of like a little bit of a macro market vacuum for stability. And so if there's any jitters or any fear of something, I feel like it can cause the market to like drop quickly 2 or 3%, and maybe
yeah,
conversely, if there was some good news, it could cause it to go up 2 or 3% pretty quickly and easily. So that's just my gut feeling. It's like a combination of jitters with FOMC tomorrow, and Bill Ackman's coming out saying that like they've got to be stronger with their language because the market is, even though market price is in like a maximum Fed funds overnight rate of like 3.5% by the end of the year, 3.4% by the end of the year, that they price in like early next year, it's going to go back down to like 2.5% pretty quickly. So the market's like pricing in that the Fed's going to reverse interest rate or like take down interest
reverse
rates pretty
course on. Yeah,
yeah, pretty very quickly after they get to their max rate. And so he's anticipating that he'll be asked in the meeting tomorrow, and that Powell and is anticipating that they will also be asked, like, are you going to really reverse course right after you get to the high point? Why would you do that? And that he's going to have to double down on not reversing course because it sort of messes up the whole point of raising interest rates if the market doesn't think it's going to be sustainably raised. So
yeah.
that I think that's an interesting angle, an interesting narrative thrown out about what could lead to more hawkishness in the macro markets tomorrow, I believe. Have you seen that by any chance? What do you think about that?
Yeah, so I think he's gonna. All indications are that the Fed is going to kind of stay the course. I think markets expecting 75 basis point hike in the next meeting. So that's certainly kind of what I expect. The question is, as you alluded to, will the economic indicators kind of turn around, later this year and into early next year, such that they do have to, lower rates or, stop QT or, something like that. And
Yeah.
we've been talking about this for a while, that I'm kind of like mildly on Kathy Wood's side of the argument that a lot of this stuff is kind of related to inventory buildups, and that there actually are some inflation or deflationary pressures that will come to bear in the later half of this year. And what we saw today, like with the Walmart news, to me is kind of an indication that is true, or at least that thesis is
Yeah.
like holds a little bit of water. Like they've got so much inventory that they just have to cut prices, and that's why
Their earnings are not so good.
they're going to lower their earnings. It's not a top line concern. So they're actually saying like we're seeing pretty strong demand, but like we just have so much excess inventory. Um, particularly on like some higher end goods. So like they're seeing
Yeah.
bigger mix of like gas and food,
Yeah.
which is lower margin than like, TVs or something like that. So they're having to discount those items to move them. And that's kind of essentially what Kathy was saying. And there was an interesting comment today. Also, GM had their earnings call this morning, and their CFO said, "Yeah, well, we've got issues with inflation, but they're actually not seeing any signs of an economic slowdown." Which is pretty similar to what Tesla said on their earnings call too. Is that
Yeah.
maybe there's like a slight sign of the slowdown in the order book, but nothing that's really like very clear to draw a pattern from.
Yeah.
So it's interesting where we could be in this environment where the economic collapse that a lot of people have been fearing, like a major recession or something like that, it could be in the cards for the next couple of years. Maybe that's not happening. At least like the early read into this earnings season is that companies are dealing with inflation issues and probably too much inventory, but not so much demand side.
Yeah.
At least that's my kind of read.
Yeah. Yeah. I mean, there's a lot of earnings reports this week. So there's a lot of signal coming in this week, macro markets and just like the big bellwether stocks, earnings, Amazon, Apple,
Yep.
Google. It wasn't Microsoft this morning. I think that's like a major company and that's
If it was, I
down
missed
big.
that.
Or I don't know what's going on, but they're maybe it's later today or it's this week for sure. I'm looking at the stock and it just crashed this morning, so I'm not sure what happened with Microsoft. I haven't caught up on that yet, but that's a major bellwether stock. So yeah, I mean, lots of signal coming in this week from biggest companies in the world reporting earnings and the macro markets and GM. That was it's I've seen some interesting. I think you retweeted someone else like Forward Capital's retweet or something, and it was hilarious. It's like, what's the best way they can like circumvent their depressed earnings and like how can they get the language around to make people hopeful of the stock? I don't know. It's just like how do they translate that to MBA talk to like get people excited about the stock or stay hopeful about the stock? I mean, it's so sad, the GM earnings and how they have to try to like frame it, in the perfect way. I mean, what do you think about the GM earnings? It looks like it's really just not looking good for that company.
Yeah, well, I mean, this earnings report is kind of a good example of why auto companies in general have such terrible like EBITDA multiples or earnings multiples or valuation multiples of any sort. Is because for the most part, auto companies have like very high fixed costs, and then they've got these series of plants that are like for the most part underutilized. And then if they take a hit, like if there's just a sequential decline in earnings for some reason, because auto sales are like highly subject to consumer sentiment, and in this case, subject to like supply chain issues that GM's dealing with. So I don't have the earnings report in front of me, but they had like a modest top line decline. Maybe it was like 10 or 20%, something like that year over year, but it was like a 40% decrease in earnings. So it's kind of like the opposite of what Tesla has, where like Tesla has this operating leverage, whereas they, increase their, deliveries and their revenue by, 40, 50% per year, then their earnings increase by an amount higher than that because they've got operating leverage. The incumbents who have already kind of saturated the market and are essentially just losing market share now and are frankly subject to giant swings in worldwide automotive demand. Like they don't have a whole lot of levers. Like they can cut staff, and a lot of them are doing that. Ford just announced a pretty big layoffs. But like you can't just like redesign a factory on a whim. And so like you've got all these announcements of them spending, tens of billions of dollars to focus on electrification. And, there was some news on like a new battery plant that they're investing in with the help of some government subsidies and that sort of thing. And it's like, they don't have, they're just a very fragile from like a financial standpoint. They're burdened with a huge amount of debt and they've got a very high fixed cost structure. So it's like it's not a great business, honestly, which is why they've got these terrible multiples. So
and don't the auto loan delinquencies going up? Isn't that a major risk for them too, or their finance arm?
Yeah, for GM. So they've got it's rebranded a couple times. It used to be GMAC. I think it's Ally now. It's essentially an in-house bank, which provides a huge amount of the profits of the company just in attaching loans to consumers. So yeah, you're right. We started to see, I don't have the exact data in front of me, but we started to see like auto loan delinquencies start to spike. And that like that has the potential to be like a major issue, not only in decreasing earnings, but like it creating solvency risk for the companies. I don't think we're quite at the point where that's, you know, an imminent issue, but you could imagine if this trend continued over time and you know, the cash flow of the core operations starts to dwindle and dry up as, you know, the EV transition, you know, they just aren't winning at. And then you've got delinquencies on their core ICE vehicles, you know, really dragging down earnings and hurting cash flow as well. Like that could be a very vicious cycle.
Yeah, I skimmed through like their presentation briefly, but there was one slide that caught my attention. I took like a screenshot. I was like, man, it was the secured battery cell supply chain slide. I don't know if you had a chance to see that, but it's circulating. You know, some people have tweeted out their deck and everything. You can find it, but I forget which page it is. But it says, you know, they're basically announcing they have enough. They've secured all the battery raw materials supporting their goal of 1 million units of annual capacity in North America by 2025. First of all, Mary said they're going to be leading Tesla by 2025 or something ridiculous like that. You know, like, so now they're saying we just secured enough supply, raw materials. And Ford did something similar the other day and said we secured enough to build, you know, I think it was Ford, right? They're like, we secured enough to build 2.2 million cars by 2024 capacity or something. And I feel like this is another NBA speak, like another NBA like PR announcement, you know, thing to like manipulate or misinform or deceive the investors. Like, yeah, we're there. We're going to be there too. Like, you know, we're not just saying it, we're securing the supply. And like, who knows, like you really would want to read the fine print of these agreements that they claim are securing supply. Like, I seen the list. They have LG Chem is like the name that I know of from studying Tesla.
Yeah.
But these others like Ultium Cells, that's their own like in-house like battery manufacturer. Like that's their own in-house manufacturer telling them, oh, we'll secure supply. Like what the heck? And then there's like Pasco Chemical Company or Livent. You know, I don't know half these names on this list of their strategic partnerships. I mean, not saying they can't get the materials and get the supply of batteries to GM, but you know, this is suspicious. Like, you know, I guess they have to do that. If I'm in GM shoes and I'm working there and my livelihood is dependent on GM stock, you know, staying floated, I would do the same thing, I guess. I mean, it seems a little bit dishonorable, but maybe they actually trick themselves into believing that, you know, we're surely going to get the supply that we're securing in these agreements. And there's probably lots of contingencies in the agreements. Like they say, like LG Chem might be like, yeah, any excess supply we have that we can't give to Tesla, we'll give to you. And we estimate it could be up to a few 100,000 cars worth or something, you know, and they count that as like, oh, locked in, you know?
Yeah.
So it's like ridiculous.
It's kind of like the Nikola thing. Like, you know, they had this partnership with Nikola at one point, and now that suddenly that's not on their strategic partnerships for like announcement, right? It's like,
yeah,
it didn't
exactly.
mean anything ever.
Announcements mean nothing. And the stock market, if somehow announcements on these stocks do mean something on the stock price, I don't understand it. Like we love, you know, the not bull case of GM, I'll tell you that. so you know, I think a lot of people have seen that on the wall, but the problem is the government, you know, they have allies with their unions and the current government administrations. You know, who knows what kind of rabbits they pull out of their hat to get like support from the government, just like Volkswagen gets support probably from the German government instead of going bankrupt one day. You know, GM is like government motors nickname is for them or something. You know, they've always been supported by the US government. So it's hard to say, but it's just a failing business in my mind.
The other thing that stuck out in that deck for me was, I don't know if you saw the cruise financials that they broke out separately. I
didn't
never seen
look into
these
that
before.
Okay.
For the first half of the year, I think it was, they had $100 million in total revenue, which like that's just like a lot lower than I would have thought.
Wow.
But an EBIT, so earnings before interest and tax, of negative $900 million. So it's like, like people talk about like how Cruise is competing with Tesla and all this stuff, and I'm like you can make a very reasonable case, I think, that like within certain like areas or certain use cases that like Waymo's better or Cruise is better or some of the Chinese, you know, EV companies are better.
Yeah.
But then you look at something like this and you're like, okay, but how do you scale up this business to make it profitable when you're losing, like your costs are 10 times higher than your revenues?
Yeah.
So it's like I hope they turned it around, but like that doesn't give me a lot of confidence that their business model is sustainable in any way, shape, or form. So,
Yeah.
people talk about Cruise as like some strategic advantage to GM, but I just frankly don't see it. Like I don't see how you get from the technology is good to the business is good. That's the leap that has never been clear.
Yeah, it's the same thing with Waymo and even Mobileye to an extent. I guess that's a little further. I would put them a little higher up, but still, like, how do they make it into a business? Like, they're not building it into the cars organically. It's like they're attaching all these like sensors. It's all geofenced. You have, I don't know. It's just, yeah, I agree. It's just, it's not a business. It's a lab experiment, and they don't know how to transfer it into a business by any means. I don't think so. Um, Anyway, let's enough bashing on GM, I guess. I'm sure we'll have more time to do that in the future. Yeah, the other earnings this week, Meta, Apple, Amazon, Microsoft, I think is later. It's not, but there was just some news this morning about like speculation about their cloud not being so big, or so, I don't know, causing Microsoft to drop. But Google today. Um, I mean, do you have any thoughts on the mega caps here? Do you think they're going to lift us up, or you think they're going to contribute to the recession fears? I mean, these are really tech mega caps these days. Walmart's the
Yeah.
only like mega cap that's not tech, and Target, right? I guess, but they have come out and said like, "Oh, this is terrible." GM used to be a mega cap, but I guess, but it's nothing close to that anymore. But these tech companies, what do you think they're going to show for the week?
You know, I, I, s- I have to stop myself from projecting out where I feel I don't actually have an information advantage. So
Yeah,
with these other tech companies, I kind of think that the results aren't going to be as bad as people might fear, but frankly, I just don't study them closely enough to think I really have an advantage there, like I do
yeah,
with Tesla. So
yeah,
I'm kind of hoping for the best, frankly, but
yeah.
like
It's very
Netflix, for
uncertain.
example, they had a
Yeah,
horrible quarter in Q1, and I think that led to a lot of the fears just like industry wide in
yeah,
Q1. And so I feel like if
yeah,
they have a good report, or if some of these other kind of more discretionary, tech companies have earnings results that are not nearly as bad as people may be fearing, that could help to be a bit of a rally. But in terms of,
yeah.
you know, like my 50% mark would probably be right where analysts are expecting, because they're following it more closely than I am. What
Yeah,
do you think?
I'm in the same boat. Like, I'm uncertain. I don't study any of these other companies super carefully, and nothing close to Tesla or the other stocks we follow. They're a lot of them are big conglomerates at this point. I gotta think that there's, negative news kind of discounted, expected into the market at this point. From the last few days, so you got to think like if they just come out to meet expectations of the analysts, that the market would react positively. But that's, I'm trying to read like the tea leaves of the market sentiment, I guess, for today or whatever. And you got to think that enough negativity has been priced in where if they just meet expectations, maybe the stocks go up a little bit. So that's where I'm leaning, but I'm not certain, maybe 60-40 feeling that. So, well, let's move to Tesla. I mean, their earnings report last week, we talked about it before their earnings report. Last Tuesday was the day before, and earnings came out, and the big, I think, surprise no one was ready for was the Bitcoin. Everyone was expecting like a $480 million Bitcoin impairment or something, but sort of like the opposite happened. They sold like 80% or 75% of the Bitcoin, and generated like a realized profit on it even, I think, right? Is that right? And
Yeah, so that there was a
yeah,
realized profit on. Actually, it was technically, I think, from the way the accounting rules would go, is they had an impairment on the full amount based on the lowest price that occurred within the quarter. But then because they sold before quarter end, they got to realize a gain, which kind of offset that impairment. I think there was still like a minus $100 million impact, somewhere in the neighborhood, a little bit
yeah,
less than that, I think. But yeah, not nearly as much as people would have thought. And I think probably the bigger news, rather than just like a one-time item not being as bad as maybe people might have feared, was that you know for all the Gary Blacks, or like the institutions of the world out there that just don't like the fact that Tesla was holding Bitcoin, it's like, okay, great, we can focus on fundamentals now, and this sideshow is over. So I think it was probably some of that rally that we saw last Thursday, I think was probably related a bit to that, and some institutions getting a little bit more comfortable with it. Probably, a bit of a short squeeze going on too, I would think there. But like overall, it was just a really, really good earnings report, I thought. Was there something that stuck out in particular to you that was either like unexpected or just like different than maybe you were thinking?
Yeah, no, nothing that I can recall that stuck out the most. I mean, I listened to the earnings call and everyone's analysis afterwards, and I thought overall it was just a very great show of efficiency, of their operating efficiency and their ability to have industry leading gross margins in spite of having their biggest factories idled for so long, or Shanghai. I sort of also further solidified my belief that Giga Shanghai is like the major breadwinner within Tesla. And, I'm not sure that changes anytime soon. So for me, Giga Shanghai is like amazing in terms of the profit margins I think it generates. Like they don't break it out by factory, but if they did, I think many of us would be surprised at just how much it separates itself from Fremont in terms of efficiency and just gross margins. And I think June saved the quarter, Giga
Yeah. Oh,
Shanghai
for
being open
sure.
and being full
Yeah.
capacity for June. I think that saved the quarter. And no one, so I think this quarter is going to be amazing. Next quarter is going to be amazing. I hope that Giga Austin and Giga Berlin come up to be, when you combine them, maybe they come up to be an asset to Tesla equal to Shanghai. But by then, Shanghai will have further expanded, I think. And, I just don't know. I don't know if it's a risk, but I just think it's like a lot of eggs are in the basket of Giga Shanghai for Tesla, I feel like. And that's a good thing, but it's also a risky thing, because, if China shuts down again, or if there's controversy between, economic wars between the US and China that affect somehow the relationship, that could be a risk, but the more international Tesla becomes, hopefully the less of a difference that would become. That's just my own, I don't have anything to show for that. Just my feeling is that Giga Shanghai is like tremendous, and the people there work super hard. It's like Elon Musk work ethic times the 20,000 workers there on the floor, sleeping on the
Yeah.
factory floors, working day and night, doing whatever's asked of them. I just don't think you can match the Chinese work ethic on this stuff. Like there's a reason why so many major manufacturers love to manufacture things in China. So yeah, that was looking at the gross margin. I don't know. I was just reading that. That's sort of a tangent, but China's a big deal for Tesla. That's what I think.
Yeah, they are. But I want to keep in mind too that even before China launched, I mean, Tesla was having gross margins of around 20% based on production out of Fremont. So, like, I think it's safe to assume that has increased since then, particularly with the launch of the Plaid S and X, and Model Y being a bigger part of the mix than it was back then. So in my mind, like I went back, I think we said this on the EPS estimate show that we did about a month ago. But like I went through and kind of estimated what the Fremont gross margin would have been, back in 2019, 2020. And then kind of started guesstimating essentially how that would have increased over time. And basically I assumed it only increased like, I don't know, 5%, something like that. So then if you do the mix shift between, Shanghai and get that all together, by my estimate, and of course this, you got to take this with a grain of salt, but I think the difference between gross margin in Fremont and Shanghai was between 5 and 10%, if I want to say. So certainly meaningful, and like having Shanghai up and running for the full quarter, and frankly even like the additional benefit of higher output now that these this kind of increased capacity has been put in place. That's going to do really great things for margin for sure. But I don't think it's the case that it's like, Fremont.
You think it's 5 to 10%? You're based on your kind of analysis. I'm thinking it's maybe like 10 to 15%. I don't know, maybe 15%. That's what I'm thinking. I'm guessing. I don't know.
15.
I'm
I
guessing it's
have a
higher
hard
than
time
people
seeing the
expect.
math. I have a hard time
Yeah.
seeing the math working out to be that way, unless like Fremont gross margin completely stalled. And then like the whole increase since Shanghai came online is only due to Shanghai being higher than Fremont. That would have to explain it, because then you've got like Fremont, I think at the time would have been around 20% gross margins. And so then to get to roughly 30% all in, or a little bit less than that, ex credits, they Shanghai would have to be like 35 or something like that. So
Yeah.
to me, it just doesn't seem likely that Fremont margins have not improved at all, especially with Model Y coming in there. So I think it's definitely an important, it's clearly more profitable in Shanghai, but I don't think it's like 15%. To me, that seems a little bit too high. But I mean, we're talking about the margins. Like, it's a very small kind of difference, I think, that we're negotiating over.
Yeah. But it's a difference. But I guess people we'll find out. I could be certainly wrong. My gut feel is that Shanghai is much bigger contributor than most people think. Anyway, I wonder if that could be like a question we could ask on, like, we can get that question like upvoted somehow. And I don't know if I want to know the answer, though. I don't know if I want people to know the answer. I don't know if I want it to be public. That might just make, if I'm right, I don't know, but maybe I'm not right. But they might not, they wouldn't, even if you asked them in the annual shareholder meeting, if we got that question asked or something, I doubt they'd give a clear answer. That, they'd keep that card probably in their pocket. They don't have to disclose that,
Right. Yeah. I think that's true. They've been very, I don't want to say cagey, but they don't want to give away so much information that people are kind of extrapolating trends, month to month, because there's so much volatility within the stock already. I think once they get to a point of somewhat maturity where you're not ramping, maybe you're ramping like 20% a year rather than 50. And the financials are a little bit more, like, analysts aren't missing EPS by 40% like they are today. Like, maybe then it makes sense to disclose a little bit more. But they're probably not going to do it right now.
Carl Branco in the YouTube comments brings up an interesting point, that's saying that Tesla risk in China remains high until BYD and others grab like XPeng or NIO grab a significant foothold overseas outside of China. Then a political action against Tesla would risk their own EV industries. That's an interesting point. So maybe when China's own EV producers are exporting significantly to the US as well, then there'll be more of a balance, and the risk of Tesla in China is not going to be as great. That's interesting to think about, I guess. And then Monday they had their 10Q yesterday. Anything interesting from the 10Q that you learned, Matt? Anything? I know you probably combed through that stuff. I didn't go through it line by line, but did you see anything that stuck out to you?
Yeah, I mean, a lot of it was, some of the things that do stick out were present in the investor deck as well. But I think some of the bigger takeaways were that the services and energy margins finally increased. So, one of our theses was that the services gross margin would increase really substantially because you got leases coming off now that Tesla can sell at a profit. So that seems to have happened, but maybe not as much of a gain as we were expecting. So I think I was forecasting roughly $100 million of gross margin on the services line. Ended up being something like $50 million, I think. So to me, that seems like, okay, well, that's like reasonably accurate. But then the big surprise, I think, was on energy. So energy really was quite profitable. And then the thing that showed up in the 10Q, which was interesting, was that there was I think it was like a $200 million increase in deferred revenue on the energy side. And so I was trying to think through what could that be? Because like with deferred revenue, you think of like a full self-driving sale that they haven't delivered the functionality on, or something like that. But on the energy side, I'm trying to figure out what could be quite that substantial, but that would be classified as deferred revenue. So I don't know. I mean, it could be some sort of like prepayment for like future period auto bidder, performance or something like that. I'm not sure, but I thought it was interesting, and the margins on that revenue is really unknown. So like, you've got to assume that it's like 5% margins, but who knows if it's like a huge auto bidder sale or something like that, then it could be very high margin going forward. And that could, like, if all of a sudden you got like a 25% gross margin software sale that starts hitting the books that literally nobody was expecting, that could be a very meaningful catalyst going forward. And then all of a sudden, analysts who have completely discounted energy to this point might have to start saying, "Oh shoot! Like, I didn't realize that auto bidder was going to be so profitable." So like, that's that's clearly in the realm of like pure speculation. But that to me stuck out as like a really interesting thing that they didn't give a whole lot of detail around what exactly that was related to.
Yeah, that's some questions that hopefully get brought up at the shareholder meeting or next earnings call.
Yeah.
People can ask more about that detail, maybe.
Yeah, so boiled down,
Yeah.
AH says it could be solar leases, but that wouldn't be classified as deferred revenue because for leases you kind of pay as you go. So like you pay for the use of the asset each month. So from Tesla's perspective, they don't have deferred revenue. They actually have an asset on their books that they depreciate, and then they get they recognize the revenue each month
Yeah.
as the lease. But it's not like you get $200 million up front from a solar customer and then like you just start paying it down. That's not how that type of lease would work. So I
Yeah.
don't know exactly what it would be, but it
Yeah.
could be the sort of thing. Oh, go ahead.
Yeah. Another tidbit from their earnings call that I see Tesla Economics remind me of is that Elon did make a statement that he believed inflation would more likely come down towards the end of this year. And he's, I mean, Elon Musk, predicts the future better than anyone. And like the most crazy thing is like, who thought a recession would be like this summer or what, when he said it like a year ago, or I don't know, it's just like somehow this guy, not only like engineering and rocket science, but now he's like some fortune teller of the macro market economy. I'm like, what the heck? So I believe him now. I have to believe him that,
Yeah.
that he's more likely right than wrong on that too. Like, so I think the market is not didn't take it seriously. People don't. So hopefully the Fed gets their signals ahead of time. Like they have some way to see the signals ahead of time instead of lagging indicators looking and agree with Elon's statement and maybe would not be so hawkish. But that was an interesting statement when someone asked him about it on the earnings call, and he did give his view that he thought inflation would be coming down, hopefully, and that it was like embarrassing how much they had to raise their prices. So I don't think they realistically lower their prices, though. I don't even think you should have said that, because now you have like if there was headlines about that, then you'd have a lot of people like holding off, waiting like, oh, wait till next year when the prices get lower. You just have people holding off. But I don't think there's an issue anyway. But I doubt they lower their prices even if inflation comes down at this point. Do you think they're going to lower their prices though, or do you think?
I like not until demand, gets quenched or satiated a little bit. I mean, like if you've got a 6-month wait time, don't lower prices. Like that doesn't make any sense. So, but
No.
if you get down to the point where you've got, let's say, Fremont or Berlin and Austin really start ramping, plus Shanghai is increasing their output, like that alone is a supply boost. So that should, if demand remains stagnant, then your wait times should decrease substantially just with new capacity coming online. So I think the real question is, do Teslas really sell more Teslas, and does all the other free advertising of Tesla owners out there, telling their neighbors, like, does that trend continue such that wait lists stay at like 6 months plus, even in this situation of drastically increasing supply, or have we kind of like max out that market of people who are willing to pay $70,000, $80,000 for a car, and they need to lower prices. So if they need to lower prices, they've got the wiggle room to do that. Could have a gross margin impact, but it's not the sort of thing that would like cut gross margin in half. If they need to lower prices a little bit to get to a broader pool of consumers. So I think they'll be fine either way, but it's a legitimate question in my mind of like, do they need to cut prices? And in my model, just to be reasonably conservative, I assume they cut, I think 10% next year was what I was assuming they cut prices by, and then like 5% each year thereafter. So we'll see.
We'll see. Yeah. Yeah. I mean, the wider release of FSD beta will certainly add to margins, and the take rate appears to be trickling up. I think Troy tests like, I don't know, he's done some analysis, and we sort of speculate that it's coming up, and so far it's hard to say if it's coming up materially or just a little bit, the take rate, but I would expect that as this quarter goes on and this next release in the next like week or so comes out, I've seen the Chuck Cook even show his I guess they've been watching some of these cars that Tesla's putting out there to test his unprotected left turn, and it looks great what they're doing now. Like these cars, like
I haven't seen those.
Yeah, he's shown a couple examples of the car, like a black Tesla, like that I guess works for Tesla, doing
Texas plates and
validating.
yeah,
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 validating the new software, and it's coming out to the median perfectly and waiting right there, and then it's like better than I would do it. So that's one instance though. Let's see if it does that type of thing across all the unprotected left turns in a similar case, right? And then there's
yeah.
other factors like, is it one thing with my car that I said that I use FSD beta like almost all the time except when I'm in a hurry. If I'm in a hurry
Mhm.
and I don't want to use FSD beta on the highway, because on the highway it like for some reason it chooses to stay behind the slow truck, even though I have this speedometer set to be like 10 miles a mile faster. It'll be in like the right lane behind a slow truck instead of getting to the left lane to like get in front of
Yeah.
it. So that's kind of, hopefully they fix things like that, because then it'll be more convenient. Right now, it's great if I'm not in a hurry. I'll just put it on and just like relax and like daydream about things or whatever, and not think about the road. Unless I see an imminent danger, then I know to take over. My mind alerts me to take over. But if I'm in a rush to like pick up my kids somewhere or get somewhere, then I usually don't use it on the highway, at least, or
Yeah.
Anyway, they'll improve it. So it's exciting to see this improvement coming on, and I think the take rate will continue to rise. I don't see it going down. The take rate can only go up from here, right?
Yeah, that was one of the things. I think I've been forecasting like a 15% take rate in Q2. After
Mhm.
looking through the results, and in particular the deferred revenue, it didn't really jump as much as I would have thought. If you look at their balance sheet, like their current deferred revenue balance
Yeah.
didn't really increase quite substantially. So I actually lowered my forecast. I assume 10% take rate. But this is like we've talked about this before. Like if I was too high on FSD take rate, that meant that I was actually too low on like their core manufacturing gross margin. So
Mhm.
that's like I've taken up my manufacturing gross margin and taken down my
Yeah.
FSD take rate. And
Yeah.
what that actually does, if you think about it, is it creates a huge amount of more opportunity, because if take rate goes from say 10 to 20, then you've got like a massive increase in gross margin. So like it's actually easier to double take rate from 10% to 20 than where it used to be at 25 to 50. So
Yeah.
like the opportunity is still so gigantic, and I think people don't really appreciate that, since take rate has been trending down over the last couple of years instead of trending up. But
Yeah.
Elon, you like reiterated that again on this call, that even at $12,000, FSD was like a ridiculously good value.
Yeah, and
Um,
another note from the earnings call, this reminds me of that he like tripled down on him thinking it's going to be wide release by the end of this year. End of this year is like 4 months away. It's like it's not much, not very far. So it's not like the end of last year when he was on Lex Friedman's podcast and he thinks it'll be sometime in 22, which would be like anywhere between, it's like a 12-month window.
mhm.
Now he's saying he still thinks by the end of this year, which is like 4 months away. Like that's a
I'm
pretty bold.
skeptical. I'm gonna say I disagree with Elon there.
Yeah.
Like
Yeah.
he's been late with these timelines so many times, and like even with this latest update, like he was saying, like back in January, I think he said single stack would be ready in February, and it's like here we are back like in July, and okay, well
Yeah.
10.4, whatever the next one is, close to single state or single
Single
stack,
stack. Yeah. It basically already
but it's
is. Yeah, he said something like that.
but it's
Yeah.
not quite like
Yeah.
actually single stack. So like
Yeah.
this, I think this problem is just way harder, and like I'm still seeing too many issues on a daily basis. Like it's still way better than it was back in October when I got it, but the rate of
Yeah.
improvement hasn't been as significant, and frankly, just like the pace of how many updates we've had has been too
Recently.
slow in my
Yeah.
mind to make me believe that we'll get there by the end of the year, unless they really start getting back to like that 2 week cadence that they were at for like I don't know, a month or two.
Yeah. Yeah.
So
Yeah. Yeah. Well, we'll see. This next update in the next week or so, I think he said he's targeting it to get out. I'm
seems like a big
excited.
one.
This
Yeah.
is a big one. Big deal. Yeah. I see Breakfast Pizza saying Farz's interview of Chuck Cook was a great discussion on the variety of challenges. Yeah, we interviewed Chuck Cook on our channel way back too, and that was really Chuck's very got a lot of good knowledge to drop from his experience and just his background, I think. So
Yeah.
yeah, I'll have to watch that Farza interview with him. I didn't get a chance to watch it yet.
Yeah, I didn't know he did that. That's
Yeah, it was
going to
like
the
a week
top of
ago.
my watch list. Okay.
Yeah,
Yeah,
yeah.
I was like out of commission for the last week or so for the most part. So I'm sure I've got a lot to catch up on.
Yeah. Now, the last point about Tesla before we probably should just jump to Q&A soon, but one thing I wanted, a big item with Tesla potentially is the upgrade with S&P and Moody's that everyone's speculating will happen soon. I think Alexandra Tesla Mama, or what's her name, something like that.
Alexandra, yeah, Tesla Boomer
Yeah,
Mama.
Tesla Boomer Mama. Yeah, you had her on, or I think, yeah, we talked to her before, or somehow, somewhere in some other channel or this channel, but um, we respect her views on stuff, especially her knowledge on ESG. And I think she worked for S&P credit rating agencies or something at one point, or so she has some unique background to have good knowledge or insight on this. And she speculates that there's like 2 downtimes a year that these investment committees or investment grade rating committees use to upgrade the companies they don't want to have to upgrade, but they have to. And that's like the week between Christmas and New Year's, when no one's gonna, like, no press or no one's gonna complain too much, or like in August when they meet, because that's like the end of the summer, everyone's on vacation. So she sort of speculates that sometime in the next month that this window in this window, the S&P committee and Moody's investment grade committee will upgrade Tesla to investment grade. I mean, that would be interesting. Gary Black seems to think it's likely as well.
Yeah.
And we've all been speculating for like a year or 2 years that this would happen, and it hasn't happened.
They're so
And
late. It's ridiculous.
they're so
Instead, they
late.
just
Sort
got
of like,
kicked out of the ESG index. It's like,
yeah,
what's going on over there?
yeah. What's going on
Ridiculous.
over there? Ridiculous. So they were so late on including them in the S&P 500 index too. So I think it'll happen, and I think there's a very good chance it happens this month, in the next month, and I think it could be a bigger deal than people realize. It's nothing close to the S&P 500 inclusion in terms of how many shares have to be bought or anything like that. But I just think it opens so many new doors for so many new institutional investors that simply are not allowed to invest in Tesla right now, but they would if they could. But now the doors open. It doesn't mean they'll buy Tesla right away, but I think it means, that there'll be more support for Tesla. There'll be some marginal buyers maybe right away, but I think it's really good for Tesla's stock performance going forward once it gets upgraded to investment grade, which is where it should have been for the last like 2 years anyway.
Yeah. I try to have like a middle of the road viewpoint about all these things. So I don't want to be like an Uber bull, but when I'm looking at the second half of this year with like Q3 margins and, Shanghai being up and running and the new plants coming online, and then like external catalysts like this, to me, it seems like there's a lot of potential good news coming in terms of like positive catalysts where, we've had a macro drag. Like Tesla's been crushing it on fundamentals all year. Like Q2 was an anomaly for sure, but they still did way better than people were expecting. So when like those issues are gone, and if macro is, neutral to positive, we could have a pretty exciting second half of the year. So
Yeah.
no, not investment advice, but it does seem like that the scale is tilting a little bit in favor of a bullish output from here.
Yeah, it's so dependent on also the macro market. Like if the macro market crashes further another 40%, let's say, then Tesla maybe it crashes, with it, but not as much as it would have otherwise. But yeah, if the macro market can rebound, then Tesla could have a really incredible performance, we think. So
Yeah.
there's a lot of it's macro market dependent, unfortunately. But we still believe in the long term. As a long term investor in Tesla, the stock will be what it is, right? But for the next 6 to 9 months or 12 months, it's very dependent on the macro market conditions. So,
yeah.
All right, let's just go to Q&A. I know we had a couple other items, but why don't we just go to Q&A?
Yeah, we can talk on Metro Mile Lemonade maybe next week.
Yeah. From Doge Nation on YouTube. Hey, fellas, thoughts on the White House changing the definition of a recession? Laughing my ass off. Insane, right? Clearly, we have negative GDP times 2 on Thursday, but it's baked in. Yeah, I saw this. I saw the White House put out some like press release saying like, this isn't really a recession, even though most people think it's like technically 2 quarters of. It was like trying to like change the definition of a recession, but I don't know, just because they put out a press release saying that, employment's strong, it's not really a recession. Like, I don't know. Technically, it's a recession. This is semantics, right? But the definition of a recession, we all agree, is 2 consecutive quarters negative GDP growth. Maybe you can call it something else. Say it's like a recession that's not so bad or something. I don't know. Call it whatever you want, but it is a recession. When we start trying to change the definition of the word recession just to fit the narrative the White House wants, so that the votes there's not a major red wave in November, which there probably will be no matter what at this point. Then I don't know. It's everyone knows they're just drawing more scrutiny on themselves by saying that, I think. But yeah, GDP on Thursday, it seems pretty clear, especially after Walmart just said what they said. Seems pretty clear that all the signals are there that, like, hey, GDP is actually negative for the second quarter.
I don't know. With Walmart though, their top line is actually growing. So like that's like GDP is kind of more like top line, not bottom line. So
that's
like
a good point. I didn't think of it that way.
I'm not so sure. I don't know. I'm certainly expecting a recession. I think there's been too much, bad news going in, and like people are feeling like I just bought some groceries this morning, and yeah, it's not like things don't cost what they used to. That's like very clear.
Yeah.
But I don't know. It wouldn't surprise me completely if we didn't have a recession. But again, like I'm not the expert on this topic, so I'm gonna not try to time the market by thinking I know something that others don't.
I think the official estimate is like positive point something percent, but the Atlanta Fed is saying like negative 1.5% or something. I don't know. So estimates are kind of all over the place around zero, but we'll see, I guess, on Thursday, whether we define it, we can call it a recession or not, I guess. So next question from Obergowich, Doug Obergowich on YouTube Live. Any concerns about Russia shutting down Giga Berlin through throttling natural gas? I haven't looked into that threat myself. I saw someone talk about it, I think like a week or 2 weeks ago, saying it's not an issue for X, Y, and Z. I can't remember specifically, but that was a few weeks ago when the idea of this was first being thrown out there that I saw. But I don't recall exactly why they said that. Have you looked into this at all, Matt, or any thoughts on this?
No, I mean, I'd be curious to what extent they're, truly relying on natural gas. Like, I'm just, to me, like if the Russia, Europe situations deteriorate, I think the issue is probably more so like huge macro, like recession, potential for like a greater European war type of situation, rather than like Giga Berlin doesn't have a physical flow of natural gas. Like to me, it's like that's the bigger issue, not the micro situation at the Berlin plant. I think most of the machines probably use electricity, which comes from a variety of sources. Of course, you need natural gas for a lot of the power plants that make the electricity. But natural gas itself is mostly used just for like heating and a couple industrial processes. I don't know if it's used for like drying of the like some of like the battery materials, or even the paint shop. I'm not sure exactly how that's used in there, but I think the electricity is probably the bigger concern. I'd be more concerned about that as a macro risk than like a company specific risk.
Yeah. Next question from Rob Womack on YouTube Live. Why the 20 billion cash equivalents? Shouldn't they deploy that somewhere other than overnight CDs, or do you think they're hedging against a downturn? Yeah, I mean, I think they're probably want to have that amount of cash or cash equivalents to hedge against a force majeure event that Elon talks about, like global macro crash or World War III, or any number of major global calamities that could happen that we don't. It's like a black swan event. We can't expect it because it's a black swan. Precisely, that's why. But we can know that black swans will happen. We just don't know what they are. That's why they're called black swans. So I think that's sort of the idea maybe behind keeping a buffer. I guess that's what the question's alluding to. What do you think, Matt?
Yeah, so I think there's that. I also think the cash that gets reported at the end of each quarter, because of flows of working capital, is always going to be like a local peak within the 3 months of each quarter. So if you think of the delivery waves where they've got cars in transit for the first 2 months of each quarter for the most part, and then the vast majority of the deliveries happen in the third month of each quarter, that means almost all your cash is coming in that third month. So it seems reasonable to me that like if we were to get a daily chart of like cash balance over the quarter for Tesla, maybe the low point is something like $15 billion or potentially even lower. I mean, if you think about, let's say 200,000 cars, being shipped but not paid for, or something like that, at an
There's like a
average cost.
drawdown in the first quarter or the first month or so, 2 months, and then it comes back up at the third month.
Yeah. If the average cost is $50,000, then that's a $10 billion just kind of like working capital timing issue. So I think it's important to keep in mind that like you do need to have that working capital balance, which is probably 5 billion-ish, somewhere in there, I would guess. But then I think you also want to have a decent buffer for, the situation you talked about, Emmet, or just like unknown unknowns or whatever. But it may also be the case that they, really are just so convinced that they've solved FSD that they want to start building their own robo-taxi fleet, and that's capital intensive or something like that. So, I think I kind of agree with Gary Black. People kind of throw a lot of crap at him, but like the way he described this recently was like, let's just take as much money as you need management for all those pet projects or things that you believe in, even if I personally am skeptical of them and don't think that they're going to be done. But then if you're left with, say, 5 billion or more, why not do a buyback with that? Like to me, that makes sense. So I trust management that they are going to, like be prudent with the amount of cash that they need. But in my mind, once you've kind of satiated all that you reasonably can foresee spending on CapEx and, Tesla bot, fleets and robo-taxi fleets and everything like that, if there is something left over, I'd be in favor of like a buyback or something like that.
All right, next question from Callie Stoker 123 on Twitter. Do you have concerns about Rocket Lab's ability to find top talent due to their locations being in New Zealand or New Mexico? I actually think New Zealand is a draw for top talent, to be honest. That's like one of the top places to live in the world, in my opinion. And I think a lot of people probably think that. But there's probably some people that don't want to go over there that live in the US or whatever. But there's brilliant people all over the world that want to do rocket science stuff. And, I don't think they have I don't think they'll have a problem finding top talent. I think the people that are in that want to go into the industry, they're obviously SpaceX is number one coming out of engineering. But I think Rocket Lab is more and more likely becoming a well-known destination for a long career in the space business, just because of their continuous success of launching things to lower Earth orbit, and no one else is other than SpaceX. I don't know. That's just my opinion, but I guess I haven't talked to any students that are leaving, prestigious schools to go to work in the space industry or anything.
Yeah, and they've also got facilities in Virginia, right on the coast there. And I mean, one of the nice things about any launch company is that they're typically going to be located on the coast, and so that's a bit of a draw, anyways, right?
Yeah.
But like particularly where they are in Virginia on the Outer Banks at it's like Chicoteague or something like that. They've like that's not too far away from like the Research Triangle or something like that in North Carolina or Virginia or something. So you look at the quality of the people that they've got, the frankly really audacious things they're doing, like with this helicopter catching and designing a brand new thing, and making very meaningful innovations on like 3D printing of rockets, and frankly their Electron rocket where you're using batteries for a fuel pump, like that's completely unprecedented. So to me, like the proof is in the pudding, and they've been able to innovate at a level that I think is only surpassed by SpaceX. I mean, like Blue Origin's got great people, right? Got plenty of resources, but what have they done? Like they're not sending stuff to low Earth orbit. So to me, it seems clear that they've got the right people in place.
Yeah. Next question from Brent Banks on YouTube Live. What will be the catalyst to push Tesla back over 1,000? Huge Q3 numbers, AI day number 2. Yeah, I mean, I think the catalyst to push Tesla back over 1,000 is going to be the macro markets, to be honest. I think just without any further news on Tesla, it could get over 1,000 if the macro markets just kind of rebound a bit more, like tomorrow's FOMC meeting and then the GDP print, and the macro markets digested, and everything seems fine. There's stability, and the earnings season goes, as expected, and it's not like worse than people expect. I think, money gets put back to work in equities. A lot of cash slowly comes off the sidelines, maybe, and that would be the best case scenario for Tesla. I don't necessarily think they need another catalyst, but if in that time frame between now and then, Q3 and Q4 earnings reports and deliveries reports, those are also, I think, catalysts, but more short term, like 1 day 5% jumps or something like that. What do you think, Matt?
Yeah, I mean, they weren't too far away. I think they hit 840 last week, so I mean, they're only $160 away
That's
from
true.
1,000,
Yeah.
which is not, not too shabby, honestly. But like
Yeah.
you've got, we touched on the credit rating upgrade. I think that could be a catalyst. That alone wouldn't
That's
do
true.
it, certainly.
Yep.
But like you've got stock split, you've got AI day number 2. I don't think that'll be a catalyst because I don't think Wall Street will give them any credit whatsoever on that.
Yeah.
But yeah, I think the combination of credit rating, stock split, and maybe solid Q3, I could see that pushing it up there. Again, not investment advice, but to me, I think you like a combination of the three of those with like not horrible macro. I could see that getting over 1,000.
The best thing about Tesla right now versus in the past is like Tesla doesn't need a specific catalyst anymore. Like in the past when they weren't profitable and they were it's like they need the catalyst. They need to unveil the Model X. That's the catalyst. Or they need to like make the first delivery of this car. That's the catalyst, or whatever. And that was, you had to hope for these catalysts, and you would hope that they impact the stock price. And sometimes they would, but a lot of times they wouldn't. And it would be disappointing because an event that you thought like that would be a catalyst to the Cybertruck unveiling or whatever, but today, like, you don't need a specific catalyst for Tesla as long as the underlying business, which is on all 4 cylinders, which at the moment it is. So as long as this underlying business of Tesla manufacturing the cars and selling them, is on all 4 cylinders, that's all you need. And that'll be shown in the delivery, production delivery numbers at the end of the first couple of days of October and the first couple of days of January. So I guess that's a long catalyst. Like just for the next 6 months, can they just stay fully operational and as a business? If that's the catalyst, I think that brings them most likely back to 1,000.
Yeah.
From Next Big Future on YouTube Live, how you doing? Okay, what do you think of China reports that Shanghai is at 2,200 per day Model Y and 1,200 Model 3 in August with upgrades, 900 per day over pre-upgrade of, oh yeah, it's true, 80,000 more in Q4. Yeah, that's the speculation is there's going to be very high production rate here in Shanghai imminently. It's already 2,200 per day in Model Y is sort of what is going around. I think Kelvin Yang is a guy I follow on Twitter and has a lot of good info, and he showed that he confirmed that rumor, I think. Or he showed who confirmed it. So yeah, I mean, I think this is the backbone of Tesla. What I was talking about earlier, that Shanghai is like super important with their gross margins and production capacity. This is like the backbone of Tesla globally at the moment, is the Shanghai factory up and running, and this is great news. Can it stay? Can it keep this for the next 6 months without like a shutdown or some major event? And that's as long as that happens, I think it's incredible news for Tesla's business. What do you think, Matt?
Yeah, I mean, I try not to get too down in the weeds on my forecasting just because I know Troy does it better than I do. But like, gosh, it's so exciting how quickly they're ramping this up. Like, I was not really expecting them to be able to put out numbers like this so quickly. So, yeah, I kind of suspect it's true. I mean, they've been talking about increasing that capacity for a long time, so it shouldn't really be surprising to us that it's actually coming to fruition. But yeah, like I think Q3, that like the funny thing with Q3 is that with this July shutdown, you're going to have the good news of you lost 2 weeks of production from these shutdowns. But then in Q4, like you've just got, that much more of a catalyst because you'll have, ironed out the processes, and presumably the rates are going to be at their highest in Q4. So I don't know. I'm just super excited for the second half of this year, honestly. I'm looking at this so much as a value play. Like I think in 2021, after the huge run up that we saw, it was like, all right, well, like Tesla's valuation kind of makes sense given how profitable they are and like how much more growth potential is still ahead. But now that the stock's come down so significantly, like just using really kind of like bare bones like PE ratios and stuff like that is, to me, it's like it's becoming a value play in the growth sector, which is just kind of crazy. And then you got this, all these call options that you and I talk about all the time, Emmet, like layered on top of that. So
Yeah.
I'm loving being long right now. Like, of course, it was
Yeah.
great when everything was just like vertical up always, but
Yeah.
I think like this is like when you actually make the money is when you're harvesting, during the times when a lot of people are like fearful and that sort of thing, or not harvesting
Yeah.
but planting.
Yeah. Yeah. Absolutely. I see a quick question from Breakfast Pizza. Is what announcements would surprise you at AI Day? I don't know what would surprise. I'm ready for surprises. I'll be surprised if I'm not surprised at AI Day, I guess. So I'm excited for that. Um, yeah, that was another thing you talked about in the earnings call, something alluding to like AI Day. He doesn't want to spill the bean or doesn't want to like give away too much. He's got some big, and it's going to be special or something. AI Day Part 2. So, all right, let's do the next question. Post it on the screen here. Alec will put this will be the last question, I think. We'll shut it down. So from Kevin on YouTube Live, Matt, any thoughts on the energy numbers released in the Tesla Q2 10Q SEC filing?
Yeah, so a couple surprises. One we alluded to earlier was the huge jump in deferred revenue on the energy side. I was kind of puzzling over that one. If anyone has any ideas in the comments, please drop them in there. So
Hmm.
to me, that one's very surprising. But the other thing that I found, well, another one would just be the gross margin itself. Farzad asked last week on this live stream whether I thought energy could surprise on gross margin. I was like, no, just like in the long term, energy will be great, but I don't think they'll. There was nothing. Looking at all the news releases and everything
Yeah.
this quarter, there was nothing that kind of indicated that any major progress would have been made on energy gross margins. But sure enough, they turned the corner and really surprised with it was like over $100 million of gross margin instead of like negative where they had been. So that was a huge surprise. But then on the SEC filing too, the other thing that surprised a little bit was the so much of the deployments on stationary storage was on the Powerwall side. I kind of thought that Megapacks would have been leading the sequential increases in storage deployments. So I was pretty surprised that there were so many like Powerwalls and smaller storage systems that were deployed. The other thing that keeps me kind of interested about this is that like we're seeing this pilot right now in California. And I think we talked about this on one of the last streams recently, but like we're just starting to get into the point where Tesla is like starting in Texas and in California to do some like pilot programs where they're actually aggregating these power walls together in a virtual power plant and trying to provide some grid stability back into the grid. Like this is not going to be a moneymaker for Tesla in the moment, but to me, it's a very important step of them going to these regulators and to these grid operators and saying, all right, listen, we can solve your problem of inadequate capacity or voltage regulation or all the different services that batteries can provide. So just let us participate and bid into those markets. And we're just starting to see that door, that crack open up a little bit. To this point, where Tesla's been experimenting on this has been with other utilities. So like Green Mountain Power in Vermont, like they had basically Tesla was providing power walls, and then Green Mountain was doing all of the like working with the grid operator and that sort of thing. Now that Tesla's actually kind of stepping into this position where they're aggregating these virtual power plants, all these kind of distributed energy resources as they're known. To me, that's like a really encouraging sign that maybe 3, 4, 5 years from now, when they've kind of built up this muscle in a more meaningful way, they can start to participate in the economics of that and take a slice of the energy revenues or on the capacity charges that they could be generating. So that's what I'm getting excited about right now.
Yeah. Good stuff. Glad we have you on our team to help break this stuff down, Matt. Appreciate it.
I feel like I'm the only one who's actually interested in this, so we probably lost half the audience. But I think it's awesome.
You lost me about halfway through that explanation, but I caught a few things. I'm sure there's half the people that really pay attention to everything, though. But yeah, some of that stuff, it's super cool, and but I just somehow I just can't stay paying attention to the energy
Well,
details.
it's kind of, and like it's a low impact. It's like, even if they like sweat, like I almost made up a word and said swatch. Even if they switch to
Yeah,
like
yeah,
huge profitability today, like it'd be like, assume they had 25% gross margins on energy, which would be a huge undertaking. The
yeah,
revenue is still so small that wouldn't really move the needle a whole lot. So
yeah,
I still do think this is going to take a long time, both for the revenue base to really increase, for Tesla to start, actually working with these incredibly slow moving grid operators and regulators, and then for them to actually be in a position where they can start having a meaningful gross margin. Like, I think all three of those things are likely to take a decent amount of time.
yeah, yeah. All good stuff for Tesla, the stock, and the business, which the stock should reflect in the long run, but in the short term, the stock is much more influenced by the macro market at the moment. So, macro market today, rest of today, is down. Nasdaq's down 1.7% at the moment. Um, Still got the afternoon to go through. It seems like the sell orders might, who knows? They typically it's like a VWAP order. A lot of these institutions do to unwind positions, volume weighted average price. So like the volume is in the morning, and then in the afternoon, in the middle of the day, it kind of stays flat or doesn't, so that's why the market's sort of rebounded or staying flat in the middle of the day. If that's right, then end of the day, the selling picks back up and the market has another leg down. So we'll see. Hopefully I'm wrong. Hopefully the market doesn't have another leg down the rest of today, and we just wait until the FOMC and the GDP print tomorrow and Thursday, and see what happens with the market after that. So,
Yeah.
all right, guys. Good chatting, Matt, and we'll see everyone next week. Next week, I think we're going to do it Monday, right? Is that right? Next week, August 1st, we're going to be on our
Yeah.
live stream, so everyone is aware. Instead of Tuesday, we're doing it Monday morning. Tuesday, we're getting ready for the shareholder meeting in Texas, and we'll be flying down there to meet some potential investors and other people that were, So we won't be available next Tuesday, but next Monday, Matt and I will be on for the live stream. Same
Yeah.
time.
Thanks for watching, everyone.